What's up, guys? Today I want to talk to you about a model that I had a lot of success with. I call it the price wave theory. Now, yes, it is a smart money concept. Model is based off of Power of 3 AMD model. All right. However, where it differs is that it's specific to certain sessions and starting with accumulation in Asian, ending with distribution during New York. Okay, and it's if we have things that fit a certain criteria. So let me get into it. Now, this happened in both New York today and yesterday. All right, even Monday as well. But let's go up here. Let me just show you what the model is all about. So we will have Asian range, right? Asian range happens right here. And then we have normal Asian range trading between a high and a low. Okay, now come London session, price now breaks out of Asian lows and goes into a PD array. Maybe like a 15-minute gap, 1 hour gap, daily gap, 4-hour gap, whatever that is. Okay, so this is the gap right here. Okay, and then after price comes out of the gap, it'll consolidate, come New York session, retest those lows, if not completely take those lows, taking the liquidity, and then just to go and take out Asian highs. Okay, that's the whole price wave theory. It includes accumulation during the Asian session, manipulation after Asian. It could even happen. Sometimes it even doesn't start. It doesn't break out of the Asian range until New York open. But nonetheless, after the accumulation, you got the manipulation followed by distribution to the opposing side of manipulation. Okay, so let's go over to the charts of this week. All right, and if you haven't done so thus far, follow me on my Twitter at the Ring Maestro. All right, I have daily call outs. I show you what I'm looking at, and I show you what we can expect. And I always post my receipts before and after. All right, so just like I described up top, here it is on a live chart. So we have accumulation happening here for the Asian session, right? After Asian session, we break Asian lows. All right, so now this was a 1 hour fair value gap, which is a PD array. Okay, but not only did it fill this 1 hour gap, it continued to dive up until market open, completely filling the new week opening gap. Okay, so it filled the new week opening gap, and then we have an immediate hit right at market open. So let's zoom in here and I will show you. So now you can. Now I did. This wasn't even higher time frame. I was just zoomed out a little bit. But you want to, whether you're looking at it in 1 hour to 15-minute, you want to get more precise entries on lower time frame entry models. Like in this case, I used an inversion. Okay, inverse fair value gap. So after it did what I wanted, it had its manipulation leg that filled the new week opening gap. I already knew coming into New York open, I'm looking for buys. All I need now is a precise entry. So I drew out this inversion right here, and once price closed above the inversion, this right here is the 930 candle, okay, where it went above the inversion but came right back under. But the next one, the 931 candle, closed above the inversion. Okay, and I just take my trade here, stop beneath the fair value gap, and let it ride. Now look, you're not always going to get a play this good. All right, and of course I always take profit at the VWAP. It's too much too influential of an indicator to not take profit at the VWAP. But of course, I'm at least leaving a few runners. Let's move up to the 15-minute. I'm at least leaving a few runners to the to Asian highs. Okay. Excuse me, I lost that thing here. All right, yeah. So we were down here, and then so I take my first take profits at VWAP. Let it ride, especially when it closes above this 1 hour fair value gap, which it came through. Now this is now an inversion. Well, it inverted this. I'm sorry, and then close above the 1 hour gap. More confirmation that we're still going higher. And then this was my ultimate take profit, the Asian highs. Okay, this is a perfect example of an AMD bottle. Let's go again. So let's do, and as you see, it happened yesterday and also even Monday. But let's get into Tuesday now, because that was what happened Wednesday. Now this is Tuesday. All right, so we have Asian range here, trading between highs and lows. Now price does go higher into breaking highs of Asian, right? But it does not dip into a PD array. That's the key point to this. It doesn't dip into a PD array. So this was nothing but what we call a Judas swing. Okay, so which it has a fake out manipulation leg here. But this was the real manipulation, okay, going into the 15-minute gap underneath, completely, and it filled the new week opening gap, came up a little bit, came back down at 10 a.m. to fill this 15-minute gap there, and then went off to the races. Let's go down to the 1 minute. Someone needs to tell me how I can maintain exactly where I am on the chart. If you know how to do that, leave that in the comments, please. But anyway, we're on the 1 minute now for more of a sniper entry. Okay, so boom. So down here, right here, we have a breaker. So we have a low followed by a high, then a low, right? So it's a breaker because this is a little order block, and then the order block was now broken to the downside, and then now we have a higher high after that order block was broken. And because it's broken, we call it a breaker. All right, so when price now dips back into that breaker, which also created a fair value gap right here, as you see, we have a 1 minute gap overlapping the breaker. We call that a unicorn model. Very high probability model, especially when it goes along with your bias, because the manipulation leg was to the downside. I'm looking for buys, and my target was, of course, Asian highs. Okay, this is my target, Asian highs. Okay, and yes, I did actually go a little higher, almost 350 points. Okay, yeah, almost 350 points here. But this was, I got out of most of my contracts here, but held further into consequential encroachment of this 4 hour gap above. But the main point of this video is the price wave theory that I'll talk about. If we dip into a higher time frame PD array on one side, we're looking for distribution for a price to target the opposite side of Asian range. All right, so I showed you Wednesday and Tuesday. All right, now to show you Monday. All right, so Monday, once again, we're between these highs and lows. We had this new week opening gap. Of course, now this new week opening gap is like the biggest draw you can have. So once you come here, if we don't close into this new week opening gap during Asian, of course you're looking for it to happen either for London or New York. And in this case, it happened PM of the New York session. Okay, this price wave theory. Now the thing about it, it doesn't always happen in the AM session, but it will usually happen throughout the day. Okay, so we came down here, and you have to dip kind of far back to see the 4-hour PD array that we dipped into. But after we dipped into that PD array, we're down to the 1 minute chart, where it closes above this 1 minute fair value gap, creating a inverse fair value gap, and then boom, off to the races. All right, it goes up to we have another inversion here, this back out, and then in the PM session it goes all the way up to the new week opening gap, which aligns with top of Asian range. All right, too much confluence there to not hold for that trade, because not only did it dip into the PD right to the downside, where if the manipulation is for one side, distribution goes in the opposite direction towards Asian highs, and where was Asian highs? Also new week opening gap, one of the biggest draws you can find. Okay, so yeah guys, if you like videos like this, and if you want me to teach you more about my price wave theory, which is based off the concepts of ICT, his PO3 model, the AMD, just shoot me a follow. Follow me on Twitter at the Ring Maestro, and give me a like and some subscribes, please. Okay, so see you guys soon.